Key points: obtaining and maintaining insurance, cost allocations of insurance, why it is critical for insurance documentation to be accurate and timely. We've all seen more than enough commercials for insurance. When it comes to public assistance, insurance has a significant role to play. Insurance proceeds have a direct impact on funds received from FEMA's Public Assistance Program. The type of insurance should support the hazard or hazards that caused the damage in the disaster. The insurance you have matters. You need flood insurance to cover flooding and fire insurance to cover fire damage. Facilities that have been damaged in the past and received FEMA Public Assistance funds for permanent work to replace, repair, reconstruct, or construct must be covered by reasonably adequate insurance to protect against future property loss. Facilities valued at less than $5,000 don't need to be insured to receive public assistance. FEMA does not require greater types and amounts of insurance than reasonably available, adequate, or deemed necessary by the appropriate state or territorial insurance commissioner. The state or territorial insurance commissioner cannot waive federal insurance requirements, but they may certify the types and extent of insurance reasonable to protect against future loss to an insurable facility. If you receive insurance proceeds for ineligible losses, such as business interruption due to the disaster, FEMA calculates a relative apportionment of insurance proceeds to determine the insurance reduction. This is based on the proceeds received per the type of loss, as it is specified by the insurance policy or the settlement documentation, policy limits for categories of loss as specified in the insurance policy, and the ratio of total eligible losses to total ineligible losses. If you spend money to pursue an insurance claim, FEMA will offset the insurance reduction by the costs to pursue the claim. There are some caveats. The incurred cost of pursuing insurance proceeds was for FEMA-eligible work, or documentation shows the incurred cost was attributed to pursuing more insurance proceeds than the initial settlement amount. If you fail to maintain the required insurance from a previous disaster, the facility is ineligible for PA funding in a subsequent disaster. This remains true regardless of the hazards that caused the damage. When the subrecipient receives PA funding for a facility damaged by the same hazard in a subsequent disaster, FEMA reduces funding in this subsequent disaster by the amount of insurance required from the previous disaster. The subrecipient may request that FEMA modify the insurance requirement when the required insurance is not reasonably available. An alternative to the insurance requirement provides adequate protection against future loss to the property, or the required insurance is not necessary to protect against future loss to the property. Thank you for watching.